It's percent Papi, you dig? For today's trade, we did 54% on a 6140 SPX put. Most people think you need a lot of money to trade options. That's not the case at all. You see right here where it says average price says 1.05. When options, whatever number this is, you got to multiply by 100 and move the decimal twice to the right, and that's how much it costs. So this trade, it cost me $105 for every contract I bought. And right here where it says 1.63 or $163, that's how much I sold each contract for. So I made a profit of $58 for every contract I had. So let's break down the trade. In options, the only thing we care about is the direction of the stock. If we think the stock's gonna go up, we're gonna get calls. The reason why stocks go up is because people are buying the stock. We call those bulls. If we think the stock's gonna go down, we're gonna get puts. The reason why stocks go down is because people are selling the stock. We call those bears. Options trading is all about support and resistance, and we use technical analysis to help us determine our entries and exits. Let's use this candle right here. Any line or indicator that is above this candle is gonna serve as resistance or the ceiling. The only way to keep trending upwards or to break through the ceiling is I need a lot of volume. Volume is the amount of shares that have been bought or sold in a certain amount of time. Each of these candles in this case represent 5 minutes. The size of the candle determines how much volume it is. The larger the candle, the more volume or the more power it has. If you notice, the rectangle part of these candles are small and this one is large. This candle has more volume than this one, which means it has more power. Green candle means bullish, meaning we're trending upwards. Red candle means bearish, meaning we're going downwards. In order to break through the resistance or ceiling, I'm going to need a lot of bullish volume. And if I don't have enough power, if I don't have enough volume, then it's going to reject or come back down as it did right here. Hit that line, came back down. Hit that line, came back down. Any line or indicator that is below this candle is going to serve as support or the floor. Only way to break through that support or floor is I need a lot of bearish volume. I need a long red candle. And if I don't get that, then it's going to bounce back up. So I got a put, which means I believe the stock was going to go down. About 20 minutes before I enter, I told him to go ahead and load up the contract because I saw that it had a potential to break through both of those supports. If you see the wick right here, that means at some point it dropped below those supports, but it did not have enough volume to keep it going. So I entered the trade at 10.08, so $105. The stop loss is 0.70 or 30%. That's the max I'm willing to risk at for this trade. So I entered right about here. It had a lot of bearish volume. Usually I wait for the candle to close, but I wanted to catch the move on the SPX because the contracts move fairly well. See this long bearish candle, which means it had a lot of volume. I did have a support right here, which means I need a lot of volume in order to break through that as well. But because of this big rejection, because it had a lot of bearish volume, I said, let's go ahead and get in. As this candle was going down, 15%, feel free to exit at 40%, 57%, make sure you secure your profits, 54%, and we out. Still had room technically to go down here. We exited at the perfect time. It bounced. It was bullish from that point on. So if you're interested in trading options or join our Discord, go ahead and put wealth inside the comments. Remember, percentage of everything. And let's get this.